Hey everyone, welcome back to the channel. Today, in this video, I'm gonna dive into the potential of an emergency rate cut. We all know that the recent stock market turmoil has become so severe that many economists and experts are calling for an emergency rate cut. An emergency rate cut is when Federal Reserve cuts interest rate without announcing it beforehand. They usually do that when the economy is in a very bad shape, like back when the dot-com bubble popped in the 2000, they did that. And when during the 2008 financial crisis, they also did the emergency rate cut. As well as when COVID hit, they did the emergency rate cut as well. So whenever there's an economic crisis, the Federal Reserve is gonna cut interest rate without announcing it beforehand to the public. Many experts are saying that it's likely that the Federal Reserve is going to cut interest rate, especially a professor from Wharton called Jeremy Siegel. He has made headlines by advocating for an emergency rate cut from the Federal Reserve. What's the big deal about this, and what could it mean for you and your investments? Let's break this down. So, Jeremy Siegel, a well-known professor of finance at the Wharton School of University of Pennsylvania, recently voiced a strong opinion on the current state of the economy. According to him, the Federal Reserve needs to make an emergency rate cut to address what he sees as economic issues that are not being adequately managed. So why is he pushing for this rate cut, and what does he think it will achieve? Here's the scoop. The first reason is due to economic growth concerns. Siegel argues that the economy is facing significant headwinds, including sluggish growth and potential risk of recession. He believes that the Fed's current policy stance with relatively high interest rates is not supportive enough for economic growth. The second reason is due to inflation and interest rates. While inflation has been a major concern for the past few years for the Fed, Siegel suggests that the current interest rates are too high and are suppressing economic activity. Also, during the recent months, the inflation rate has slowed down significantly, and which in turn makes a rate cut safer. He believes that a rate cut could stimulate investment and consumer spending, which in turn would help boost economic growth. The third reason he argued is due to global economic conditions. He points to global economic slowdown, including economies in major parts of the world like China and Europe, which could be impacting the US economy. He argues that an emergency rate cut could help counteract these global factors. So, what might an emergency rate cut look like, and how would it impact you? Most likely, if there's gonna be an emergency rate cut, it's gonna be between 50 basis points to 75 basis points, which amounts to 0.5% to 0.75% if there's gonna be a rate cut. And when that happens, it's gonna lower your borrowing costs. It's good for the consumers. A rate cut generally means lowering of borrowing costs. It will make loans and mortgages cheaper and boost consumer spending. It's going to act as a stimulus for investments. Lower interest rate will encourage businesses to invest more in growth opportunities because the cost of borrowing money went down. This could be positive news for the stock market and could lead to higher equity prices. However, it's not without risks. if done excessively, they could lead to higher inflation or even asset bubbles, like what we saw during the past few years. Quantitative easing, which basically means money printing. And if the interest rate is too low, the inflation might come back again, which is something the Federal Reserve cannot afford to do. So it has to balance these risks carefully. As of now, the call for an emergency rate cut reflects a growing debate about the Fed's role in managing the economy. While some experts support the idea of stimulating growth through lower rates, others warn about the potential long-term consequences, like inflation coming back. So, what do you think about the idea of an emergency rate cut? Do you agree with Siegel's perspective, or do you think the Fed should stay its course? Share your thoughts in the comments down below. I'd love to know about it. If you found this video helpful, don't forget to give a thumbs up, subscribe for more financial updates, and hit the notification bell to stay informed about the latest in finance. Thanks again for watching, and I will catch you in the next video.